Hi, I'm Brad Konishi from HARPTA. We do a lot of business with military service members, so let me show you what I know and how we can help you. First of all, if you are a military service member and you're a resident of the state of Hawaii, you get an immediate HARPTA exclusion. So how do you know if you are a Hawaii resident if you're in the military? Well, first of all, take a look at your pay stub, your most recent pay stub. Do you have a tax withholding for the state of Hawaii? Also, too, do you file Form N11, which is the resident income tax return for the most recent year? Well, if the answer to these questions are yes, you probably are a resident. And if you're a resident, here's what you do. When you accept an offer and go into contract, escrow will give you Form N289, which is this form you see here. You check box 1, which states that you are a resident of Hawaii, and then HARPTA will immediately not be withheld. But remember, only check that box if you are actually a Hawaii resident. If you are not a Hawaii resident and you check this box, it could be construed as tax fraud. If you're not a Hawaii resident, there are two different groups I'm going to talk about, and I'm going to talk about how HARPTA is handled. First of all, the first group would be military service members who lived in the home the entire time they've owned it. The second group would be military service members who have lived in the home, but who have also rented it out for some point in time. First of all, military service members who have lived in the home the entire time they've owned it, they are very likely to be approved for a waiver based on what's called the Section 121 tax rules. And basically these rules say that the first $250,000 of gain may be waived for both federal and tax purposes, which if you apply for a waiver and you have more than 10 business days prior to closing, you can file for that waiver and it'll likely to be granted based on these Section 121 main home gain exclusion rules. If you're a military service member and you've lived in the home for less than 2 years, however, you've lived in it for the entire time that you've owned it, you can also apply for what's called a reduced maximum gain exclusion, which likely contains enough exclusions to make all of your gains non-taxable. If you are in the military and you're a service member who's lived in the home and rented it out, however, there's a different set of rules that may apply to you. First of all, you have to know before you can get any kind of HARPTA, some kind of positive HARPTA treatment, you must be current with all of your Hawaii tax filings, which means you have to be current with your general excise tax for your rental. You have to be current with all of your transient accommodations tax filings, if that applies, and you also have to be current with your Hawaii state income tax filings. So if you're a military service member and you've lived in the home but you've also rented it out, think of yourself in one of these three categories. Are you selling the home for a loss? Are you selling the home for a gain? Or do you have insufficient equity and are you required to bring cash to closing? Because those three categories are all treated differently for HARPTA purposes. So the first category, let's talk about selling the home for a loss. If you're a military service member, you've lived in the home and you've rented it out. If you're selling your home for a loss, as long as you can support this by showing proper documentation, you can likely apply for and receive a HARPTA waiver. However, if you're a military service member and you've lived in the home but also rented it out, if you're selling the home for a gain, if you rented the home and had a gain when you sold it, you will not be able to receive a HARPTA waiver due to something called depreciation recapture. So your options are, you can apply for an early refund after closing, or you can wait until the following year and file a Hawaii income tax return, and you can get back your HARPTA money, at least some of your HARPTA money that way. The third is, if you are a military service member, you've lived in the home and you've also rented it out, but you're in the unfortunate situation where you'd need to bring cash to closing. If you need to bring cash to closing, you may be able to receive what's called a HARPTA reduction. So how does that work? If I need to bring cash to closing to sell my house, how does that happen? Well, let's take a look at an example of how somebody gets into a situation like that. First of all, Tom buys a house for $600,000. Let's say he puts down 10%, which is $60,000, and borrows $540,000 to purchase the home. So 2 years later, Tom's mortgage has a balance of $530,000, and he sells his home for $610,000. Let's assume that Tom's selling expenses, which include things like commissions, escrow fees, transfer taxes, and such, should be about 6%, which is about $36,600. HARPTA is 7.25% of the gross sales price. So that means it's equal to $44,225 in this example. So if HARPTA was reduced, or if HARPTA was included in this transaction, the total expenses and payoffs would be $610,825. So that's the $530,000 that he has still left on his mortgage, plus the $36,600 in selling expenses, plus the $44,225 that Tom would be expected to pay in HARPTA. So altogether, in order to close, Tom would have to bring $825 to closing in order to be eligible to receive a HARPTA reduction. So what happens in this case is in certain cases like this, the state may allow a HARPTA reduction. Military members who have lived in the home but have also rented it out, be aware that you have a special benefit that is available under the rules of Section 121. The normal window for this benefit is 5 years, but members of the military on active duty may be eligible to extend this window up to 15 years. So I know Section 121 and the like seems confusing, but please check out our video on Section 121 to kind of digs into the details of this tax rule. One thing to be aware of, however, military Section 121 caveat, something to be aware of. If you've lived in a home for less than 2 years and were transferred to another location, please consult a qualified tax professional to discuss before turning the home into a rental. Because if you convert the home into a rental, that may invalidate any reduced maximum gain exclusion that you may benefit from, which could end up costing you thousands of dollars in additional taxes, which could have been avoided with better planning. So if you're in this situation, if you've lived in the home for less than 2 years, please consult a qualified tax professional before you convert the home into a rental. So that was a lot of information that I presented. So let me try to summarize it for you. If you are in the military and you're a Hawaii resident, which means that you're filing Hawaii taxes and you have tax withholdings on your military income, then you're eligible for an immediate exclusion of HARPTA by just checking box 1 on your form N-289 when you go into contract. If you're not a Hawaii resident, if you're in the military who does not declare Hawaii as your state of legal residency, you still have a few options. First of all, if you've lived in the home as your main home the entire time you've owned it, you can probably apply for a HARPTA waiver and will likely receive it. If, however, you're not a Hawaii resident and you had some rental activity besides living in the home, whether you can apply for a HARPTA waiver or not depends on a couple of things. If you're applying for a HARPTA waiver based on a loss, on a tax loss on the sale of your home, you're likely to receive it. However, if you have a gain on the home and you've rented it out for a while, you probably will not be able to get a immediate HARPTA waiver or any kind of HARPTA waiver because of something called depreciation recapture. However, if you're in the unfortunate situation where you need to bring cash to closing, you could probably apply for and receive a HARPTA reduction. So I know it's a lot of things, and your situation may be a lot more complicated than some of my explanations cover. So if you have any questions at all, please give us a call at HARPTA Help. Our number is 808-737-4412, or you can email me, brad@harpta.com. Thank you.